Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. So this week we mostly were watching for inflation data, so PPI, CPI numbers, although, well, they're slightly different from the expectations, but as the first one, as the second one, have brought some minor surprises. Although if we'll take a look a bit deeper in the numbers, you will see that these surprises are not really small. So first of all, on the CPI number speaking, nominal CPI, well, behaves relatively good. Just at the same time, we could say that the 2 decimal points it have shown the, well, actually increasing. Despite that it was below the expectations, but still it has increased. While the core CPI, it's what is really matter. It's just because it stands stable around 4.7%, or if we will round it, it's around 5%. Despite all efforts that is done from the Fed. As we have talked about the crude oil prices and in general recent numbers that we have seen, you could see that, well, actually shaking across the globe. Gas in Europe once again has skyrocketed. We have the rally on the gasoline prices across the world, not only United States. We have big lack of the supply of the crude oil products, especially heavy oil, that is necessary for heating oil production, diesel, fuel. So it's unavoidably will lead to rising prices. Food have started even in June, especially in the rice, as you know, it has risen for the 50% in price due to the banning of the supply on the market from India. And all stuff together tells us that we're unavoidably coming to the next spiral of the inflation. By our view, it should become evident in August and September numbers. Although recent change in the CPI numbers could be a first minor bell for our coming changes. As we have described in the report, in general we have the cycle of the inflation approximately with the 22-24 months. It means that the next spike, next top of the inflation should be somewhere in the middle of 2024, and it's really big chances that it will be 2 digits. So we will see. But overall background tells only the one thing, that Fed will keep rates at the high level, and it's not excluded that new rate hiking will follow. Even the Fed representatives already have talked about this. So that in turn means that rising yields on the United States unavoidably should lead to the strength in the United States dollar. Besides, in Europe we have other problems, in particular in Germany. So all this stuff I have put in the report, and by reading the report you probably should get more or less clear vision what is really going on. So that's about the longer term perspective. In the shorter term, in general, as you can see the performance of the market on Friday, and actually it is confirming what we said about the price behavior. So it confirms our warnings that actually market behaves wrong from the bullish point of view. And indeed, as you can see on Friday, we've got this collapse. So markets now is challenging once again this 50% support and the flag shape. Overall, it looks bearish. Also, we have some another bearish signs on weekly chart and the monthly chart. So next nearest standing level is 108.80, and another thing that you need to take into consideration, we'll take a look at this table here. As you can see, overbought and oversold levels for all time frames, and oversold on the daily is 108.38. So if market even will break this level next week, hardly it will drop lower than 108.40. So approximately that will be the destination point for possible downside action, and we need to consider some targets that stands around it. On the 4-hour time frame chart, we do not have any suitable ABCDs. That's why we use the target of the butterfly. This is ultimate extension to the upside. I have chosen nearer standing target, but if you want, you also could consider the extension right from this bottom, because this is failure of the hand and shoulders, and you could use these targets as well. But I have chosen a bit nearer standing, closer standing targets. It's more conservative view. As you can see, first one stands at 1.93 approximately, which is perfectly fits to the 1.80. It's very close. The fib support, and next one 1.46 approximately, which is very close to the daily result. These two targets that we will consider. On the hourly chart, in general, well, our performance that we have suggested has happened. So we said take a look at some ABCDs and thinking about the taking position. Here's once again shows you why the splitting of the entry when you are sure of the direction is very useful tool. Those of you who were waiting for a 618 bounce was not able to take the position, while the splitting, although you maybe have just a 30% of your common trading lot, usual trading lot, but still you were able to make some result on this downside action. Now local ABCD has a few targets. First one is 1.50 where it stands already, which is a COP. OP stands 1.916. It's lower and it's actually right around the previous lows of the failure hand and shoulders. I'm not thinking that actually these two targets could provide some real significant support. It's just because its hand and shoulders is failing. It's failing miserably, and even minor local on the hourly chart, any OP or COP targets can't avoid actually the breakout below the lows, which is final crash of the hand and shoulders pattern. So butterfly targets that we have here are more reliable than intraday targets. In fact, these targets we need just to see the levels where a pullback would happen. And right on Monday morning, if market here, as actually you could see, it's not very strong action. Maybe we'll get some pullback. Once again, we're considering these two levels for possible entry. First one is 1.67 and the confidence 1.980, 1.980, 1.990. So it's two levels. In fact, market will keep this short-term bearish context if it remains under the C point. In the case market will jump above the C point, it would be better to sit on the hands and see what will happen, because in the current situation it will be something not common. So if we are correct on this bearish scenario, market should not jump above the C point. It should not erase this ABCD pattern. So that's what we have currently on euro. Let's keep watching and see what will happen on Monday.